What's going on, guys? Josh Baldwin here from Mad Money Millennial. Please pay a quick visit to those like and subscribe buttons, and let's get into this video on the recent $70 million in fines Robinhood was ordered to pay to FINRA, the Financial Industry Regulatory Authority, which is the non-government entity responsible for the oversight organization for hundreds of brokers across the U.S. Now, these fines were essentially paid as restitution to settle allegations that the brokerage caused customers, and I quote, widespread and significant harm due to a series of misleading actions over the course of several years. And interestingly enough, this is FINRA's largest ever issued penalty ordered in history. So what exactly prompted this investigation, and what exactly does it mean for Robinhood's customers? Essentially, FINRA's investigation uncovered millions of customers who were told either misleading or flat out false information by Robinhood regarding things like customer account balances and the ability to place trades on margin. In terms of numbers, the result of this inaccurate information cost customers a whopping total of $7 million. As such, Robinhood has been ordered to pay restitution to those users affected by the platform's concealing actions. Among other allegations involved in this case are a situation in which Robinhood allowed a number of users to execute risky option trades that should not have been allowed by the platform, but were executed anyway. Other issues include a series of power outages that occurred in 2020 that also adversely affected users. In response to these allegations, Robinhood spokesperson Jacqueline Ortiz Ramsey has stated that the company has taken steps to not only prevent these issues from happening again in the future, but also in improving this platform and expanding its customer service team. Now, this is not the first time Robinhood has been in choppy waters with its customer base. If you recall, Robinhood restricted trading earlier this year in response to the GameStop short squeeze initiated by the Wall Street Bets Reddit group. So this is definitely not the first time we've seen Robinhood limit the number of features available to its customers during times of peak trading activity. Now, whether this is due to large and very powerful hedge funds pressuring Robinhood to pull the plug in order to cover their losses, or if it legitimately was caused in some part by those power outages and system failures, we can only speculate. Personally, I do believe there was massive pressure coming from not only these large institutional investors, but also from the SEC, who regulates Robinhood's financial activity and is also responsible for prosecuting companies and individuals involved in civil suits. So I find it pretty likely that the brutal combination of the $20 billion in short seller losses, a number of disgruntled hedge funds, and the regulatory authority of the SEC, which ultimately drove Robinhood to restrict trading activity. So my best advice is to do your due diligence when it comes to picking a good broker, and of course, be sure to carefully protect your finances. Never invest anything you aren't willing to lose, and stay safe, stay hustling, and I will talk to you guys again soon.